Hello, sir. Hello, can you hear me, sir? Can you hear me, sir? Hello, my host.
Prof, I can hear you. Good evening, sir.
Oh, good evening, sir. Well done, sir. Thank you so much, sir. Thank you. How is family, sir?
Family is fine, we thank God.
Okay, thank you. I think we don't have today yet. So. Yeah. Okay. Okay. Now, I think I'm having like one student online now. And welcome on board. I hope this is having tasks online. Tasks, good evening. This is Okay. So I hope I'm with stars. Yeah, good evening. Welcome to the class. This is a cost volume profit analysis class. Welcome. I hope I wish you the very best in this exam, by God's grace. Sorry for coming late. We had a logistic issue. The reason why we had the issue, we were unable to start the truth. I sent a message to that effect. Sorry. So let's start with our today's topic. So let's take a cost volume profit analysis. I will send this note to you immediately I'm done. I get in the. Let's just quickly take a cost volume profit analysis. So these are just a straight to the point note on cost volume profit analysis. So please note it. Now let us look at cost volume profit analysis and see what exactly we mean by cost volume profit analysis. Now, from the word cost volume profit analysis, we mean the study of the relationship of what of cost and profit, cost of productions and profit made at different level of output. I mean, it's a decision-making topic that will assist a manager to be able to make an informed decision of how many units of his product he needs to produce to make so much profit he desire. It's also a topic that is a decision-making topic and will help you to know how many units of your product you need to produce for you to break even. It's also a topic that will help you to make several decisions. I guess what I'm saying, a decision that will help you to run the affairs of the organization the way you should. I hope you are getting me now. That is the focus of what of cost volume profit analysis. And if you look at it deeply, the first time they set it in the last syllabus happens to be November 2014 questions. They set it in November 2014 questions. And we don't know when next they are going to set it again. I know they've set it about 1 or twice again after that time, but I know sooner or later they will also come from this area of the syllabus. So let us look at it. Sorry, 1 minute, please. Let me just. Okay, thank you. Now, so let us now look at how do we use cost volume profit analysis to make decisions in organizations. Now, for us to be able to use cost volume profit analysis to make a decision, we need to first keep ourselves abreast of some formulae. But don't forget, when you are using CVP, cost volume profit analysis to make a decision, it's actually divided into two parts. One part is what is monoproduct part, while the other part is what is multi-product part. When we say monoproduct part, we mean the part of the world of that CVP that deals with only one product. That is, if you are producing only one product, how do you make decisions? That's monoproduct. But at the advanced level, in skill level, they also require to know the multi-product aspect of it. That is when you are producing more than one product. But don't forget, our focus in this class is monoproduct, when you are producing only one product. And you need to note also that this topic is a decision-making topic. Manager use this topic to make an informed decisions of how the organization should be run. Most importantly, in production organizations. I mean, organizations that produce bread, that produce what we eat, what we use. I get what I'm saying. Those organizations are the organizations that make use of this CVP. I hope you are getting what I'm saying. Now. So let us now look at the CVP as a whole now. So for the CVP, we want to now see how do we use it to make decisions. The first thing we need to know is that we need to know the formulae that surrounds the CVP. Let's start with the formulae. I guess what I'm saying now. The first formulae I will have to introduce you to, I mean, in respect of CVP, use of CVP to make decisions. Please don't forget, CVP talked about the relationship between the cost of production. Look at it, the cost and profit. What's the cost and what's the profit? And how is this relating? The cost and profit, how are they relating together at different level of productions? So if I'm producing bread, for instance, I get me as a manager of that bread producing company, I want to see how is the cost of my bread. That's the cost of flour, sugar, salt, the cost of labor. How is the cost? How is it relating to the profit I'm making? Is it that whenever the cost goes up, my profit will also go up? How can I get what I'm saying? At what level of output? That if I produce 10, if I produce 20, if I produce 30, what is the relationship of my cost and what and profit? If you are looking at the relationship of your cost and profit at different level of what, different level of outputs or different level of production of bread, let's assume is what we are talking about, what the use of cost, volume, profit analysis. So for you to make those decisions, you need to first know the formulae that will help you or equip you to be able to make those decisions and make it for the CVP. So what are those formulae? The first thing I want you to know is that to get formulae, the first one is what is the break-even. Now, when we say break-even point, what do we mean by break-even point? Now, even in your organization, if your boss asks you, what's our break-even point? What are they asking? They are asking that at what point are we able to neither make profit nor loss? If you are producing bread, now say how many units of that bread you need to produce for you to break even. I get me. They are telling you that how many bread you need to produce and sell for you to neither make profit nor loss. It means it's a middle point. It's a middle point for an organization because at that point you are neither making profit, you are neither making what? Neither making profit nor what? No loss. Let's say, for instance, let me ask you a question if you are there, Taz. Taz, if you are there, let me ask you a question. Let's say, for instance, your break-even point is what is 20. That's the point that you produce that you Now, so Taz, let me ask you, assuming our break-even point is 20 units, if the unit now increased by 1 to 21, what does that translate to? As in your understanding of what does that translate to if it's 21? You know, your break-even point, that's the point that you neither make profit nor loss, is 20. That if you produce 20 bread, you're already on point. I hope I get what I'm saying now. If you produce 20 bread, you're on point, you are neither making profit nor loss. Then if you now produce one extra, what is it translating to? Can you tell me? Just shut me up so that I will know that we are together, please. Just shut me. If it's one more unit you are producing, what exactly are you what? Are you doing? What happens if you produce one more to make it 21? What are you doing? What's the meaning of that one more extra? I'm waiting. Yeah, thank you. Wow. More revenue, yes, it's more revenue. Thank you. It means that thank you very much. It means that there will be more profit. I hope I get what I'm saying now. That means that one more unit will translate to profit for you. Because at that 20, your cost is equal to your revenue. And I'm neither making profit nor loss. I hope I get what I'm saying now. So if you now produce one more, making 21, that extra one on it is translated to profit. But assuming you produce one less than that 20, that means that you are operating below the break-even point and you are making a loss. I hope I get what I'm saying now. So it simply means that at that point of 20, you are neither making profit nor loss. But if you exceed the 20 or you below the 20, you'll be either making profit or loss respectively. I hope I get what I'm saying now. So what is now the point of that break-even? If you are producing bread and you want to determine that point of break-even, what do you do? If you are determining the point of that break-even, what do you do? Now, give me 1 minute, please. Now, what do? To determine the break-even point, then the formula is total fixed cost over contribution per unit. What do I say? Total fixed cost over contribution per unit. Now, I hope you know that. I know they must have taught you what is fixed cost, what is variable cost. The fixed costs are the costs that remain unchanged despite the level of what changes in the level of output. That's fixed cost. Example is the cost of your rent. Your rent will not change even if you increase your output. I hope you're getting what I'm saying now. That's it. But if you look at variable costs are the costs that will be changing with the changes in the level of output. I hope you understand what I'm saying now. That's it. Now, if you now divide the fixed cost of the organization by the contribution per unit, you will get the break-even point. What do I mean by contribution per unit? That's the selling price of the bread minus the what? Minus the variable cost per unit of the bread. Wow. I think Taz is not online for now. Let's wait for him to come online so that before I continue. My boss, Mr. Ayodeji, how's everything, sir? We are waiting for Taz to come on board. At least for now, we are not having him on board. Okay. Okay, welcome, Taz. Welcome. Now, I technically waited for you so I can. So when you are now finding the break-even in unit, it is fixed cost over contribution per unit. Now, you now ask me what is the meaning of contribution per unit? That's selling price minus variable cost per unit. You know the variable cost now, that's cost of your material, labor, and so on. That's the cost of that variable cost per unit of that bread. That is, if you remove it from what you are selling each of them, whatever you get is your contribution per unit. If I now divide the fixed cost of the organization by that contribution per unit, I will get the number of units of bread that we need to produce that will neither make profit nor loss. Now, Taz, let me now put it this way. Assuming you are a manager of a bakery, and you just want to start the bakery business, and the rent of that bakery is 1 million naira. Let's assume your rent is 1 million naira, and the bread you are selling, you want to use it to produce bread, that facility, and each of the bread you are selling it for 10 naira. I guess what I'm saying now. And the cost of material, flour, sugar, salt that you use to produce one bread happens to be 6 naira. Can you now see 1 million naira is your rent? Each of the bread is 10 naira selling price, while the variable cost is 6 naira. Then you now ask you how many bread can you produce that will make you to neither make profit nor loss? Can you be at the middle point? Then you now say my rent, which is my fixed cost, can you see my fixed cost, which is 1 million over contribution per unit, is selling price minus variable cost per unit, 10 minus 6. That will now be 1 million divided by 1. 10 minus 6 is 4, divided by 4. That will be 250,000 bread. It means that if you don't, in that instance, if you don't produce 250,000 bread, you will not break even. That's what it means. So can you say I've made a decision that I've been able to know what is my break-even in unit? That's the unit I need to produce to neither make profit nor loss by dividing the cost of my rent, which is the fixed cost, by the what? By the contribution per unit, which is selling price minus variable cost per unit, which is 10 minus 6. That's 4. Then I'm going to say 1 million divided by 4 is 250,000 bread. So with that, I'll be able to have that at the back of my mind that if I produce 250,000 bread, I will neither make profit nor loss. So if I produce 250,001, that will be a profit. That one will need to be a profit. We translate to profit. If I produce 249,999, that's what that will be a loss. Okay, that's what I'm saying. So please note that. B, they can now ask to compute break-even value in what? Break-even in value. What's break-even in value? You see, the break-even in units is different from break-even in value. When they say in units, that means that now, so that means that when they say in units, That's when you can count what you can count in units. But when they say in value, that is when you are having what? In value is what is when you are in value, that is when you are determining what in money terms. I hope I get what I'm saying now. So please, welcome, kindness, Obikwe, welcome to the class. Now let's look at it. If they now ask you prepare a break-even, determine the break-even point in sales. That's how many bread, what's the monetary value of that bread you need to sell for you to break even, for you to neither make profits nor loss. Now note, the break-even point is the point of productions that will neither make profit nor loss. I've explained that. If you want to get the break-even point in value, that's in I just say total fixed cost over what? Over contribution margin ratio. Can you now see the other one was contribution margin, but this one is now contribution margin ratio. What do you mean by contribution margin ratio? That's the proportion of contribution in your sales. I hope you get what I'm saying, a proportion of contribution in your sales. That's contribution margin ratio. Now look at it. So to get the contribution margin ratio, how do you get it? Just say what is your contribution per unit divided by selling price. Now what do I mean by this? Let's say for instance you are given selling price of 10 naira. The selling price of the bread you are talking about is 10 naira, and your variable cost per unit is 6 naira. So they now ask you what's your contribution per sales ratio. So the contribution per sales ratio will now be 10 naira minus 6 naira, which is how much? 4 naira. You now see that 4 naira, we now put it on selling price of 10 naira. That's 0.4. 4 over 10, that's 0.4. That means that your contribution per sales ratio is what? 0.4. It's actually talking about what is the proportion of your contribution in sales. I hope I get what I'm saying now. So please note it. If the examiner asks you, what is the given in sales value? That is in money. Please, if you look at November 2014 question, the one they asked there, they ask you compute the break-even in units and compute the break-even in value. Unit simply means the number of bread you can produce. Value simply means the monetary value of that bread. That's if you count it in money. I guess I'm saying now, what is the value of that bread? That is what we call break-even in value. I hope I get what I'm saying. And if I finally break-even in value, it will be fixed cost over contribution margin ratio. And I told you that your contribution margin ratio simply means your selling price minus variable cost per unit over selling price. That's your contribution margin ratio. That is that. The third formula that you need to know for you to make your decisions in what's in break-even is what? The number of units to sell to make a targeted profit. Now, kindness, let us look at it this way. Assuming kindness is a producer of a bread, you are a producer, you are a manager in a manufacturing environment, a bread producing environment, and you are now asked that, okay, kindness, how much bread are you going to produce for you to meet a profit target of 10,000 naira? You know, that's a decision making. They want to know how many bread will you produce and sell for you to meet a target of what? A target of 10,000 naira profit. I guess that's the decision. So for you to do that, you now say, number C now, number of units to sell to make a targeted profit of what? Of 10,000 naira or whatever the naira they are told. Now, what do? You just say the total fixed cost plus that profit you want to make. You know, the profit is 10,000 now assumed. You just say, just add the 10,000 to the fixed cost. I guess you now divide it by contribution margin, not contribution margin ratio. This one is in naira, please. This is in naira. So far as in naira, this contribution margin ratio. I hope I get what I'm saying now. So what does that mean? This is supposed to be in units. Please forget this naira sign there, please. Sorry. Now, for you to get the number of units to sell to make a targeted profit now, units. Can you see they put unit there? Forget the naira. Don't put naira. Unit. It should be the fixed cost plus that profit over contribution margin. You know, there is difference between contribution margin and contribution margin ratio. Contribution margin is selling price minus variable cost per unit. But contribution margin ratio is selling price minus variable cost per unit over selling price. I hope I get what I'm saying. So you will use contribution margin to get units, but you will use contribution margin ratio to get value. I hope I get it all the time. It's very important. So now the number of units of the bread, let's assume you are producing bread, the number of units of the bread you need to sell to make a targeted profit is now the fixed cost plus that profit you want to make over the contribution margin. I hope you're getting what I'm saying. Over the contribution margin. That's the what unit you need to sell to make that profit. Now, if they ask you to now get that profit in that unit in naira, it means that that's monetary value now. That's when you use contribution margin ratio. I hope you can see the difference between contribution margin and contribution margin ratio. Contribution margin is selling price minus variable cost per unit. Contribution margin ratio is selling price minus variable cost per unit over selling price. What do you just need to do? Just the fixed cost, add it to the profit you are looking for, then divide it by the what? Contribution margin ratio to give you the amount of bread you need to sell for you to what? To achieve that particular profit. I hope you are getting what I'm saying. So that is that for that. So we have been able to talk about what is the break-even in units, what's break-even in value, what's the number of units you need to sell to make a targeted profit, and what is the monetary value of that what you are selling to make a targeted profit. But don't forget, in your exam, if the examiner give you profit, the profit they must give you must be profit before tax. I guess what I'm saying. If the examiner now give you a profit after they have removed tax, you need to convert it to. Don't use it directly. If you use it directly, you are going to have issue with the examiner. I get it? Because as far as we are concerned, no. Because as far as Gracious is not online again, because as far as we are concerned, the profit that we are recognizing for the computation of this break-even in units is what? Of this CVP is profit before you remove tax. We don't recognize tax here. I hope you're getting me. Tax is not recognized here. That is why whatever the profit you are using, it should be profit before what? Before tax. Now, if the examiner now gives you a profit after they have removed tax, in the exam, quickly remember what I'm explaining to you now. That you need to quickly convert that profit after tax back to what? Profit before tax, before you now use it in your computation. I hope you're getting me. Our question now is how do we convert profit after tax to profit before tax? How do we convert it? Now, look at it. It said targeted profit is assumed to be profit before tax. However, if the targeted profit is profit after tax, that's if they give a profit after tax, there is need to gross up. You needed to gross up the profit after tax to profit before tax. Convert it to profit before tax using the formula below. So how do we convert profit after tax to profit before tax? We will now see. Profit before tax now can now be, to get profit before tax, and you now say profit after tax over 1 minus tax rate. Hope you're getting what I'm saying now. Profit before tax now. Hope you're getting me. Is now profit after tax of 1 minus tax rate. That is your profit before tax. So whenever they give me profit after tax, I'll just say that profit after tax is 10,000. I'll just say over 10,000 over 1 minus what? The rate of tax. I get it now. So that is that for that. So I will still pick that in a question for you. I get it. The next one is what? We'll see illustrated. Just forget these computations. We'll see illustrated with other example. Let's look at E. The number E formula is what? Margin of safety. If the examiner now say, okay, what is margin of safety? Compute margin of safety. What will you do? I guess you say you have to what? You have to first understand what is margin of safety. Margin simply means profit. And you know what? When you say you are safe, it means that your profit is safe. I hope you guess what I'm saying now. Margin of safety. Margin of safety is telling us that what is the extent of what? The difference between the degree at which the budgeted sales, what you are budgeting to sell, exceed the break-even sales. You know, at break-even, you are not making profit, you are not making loss. But if you are now selling at a point that is higher than break-even, let's say your break-even point is maybe 100 units. And if you produce 100 units, you're neither making profit nor loss, have you? Now, if you're now producing 120 units, that is what you are budgeting to sell now. Now, you know, in 120 units is what you are budgeting to sell, but your break-even units is what? Is 100. Do you now see that the 120 is more than what? Is more than 120 is more than 100. By how many units? By 20 units. I hope I get what I'm saying now. It's more than what the 100 by what by 20 units. So that simply means that your margin of safety is 20. That simply means that the extent at which your break-even sales exceed the budgeted sales exceed the break-even sales will give you a what? Will give you your welcome. The extent at which your what budgeted sales exceed your break-even sales will give you a margin of what? Margin of safety. I hope I get what I'm saying now. Yinka, welcome. Welcome. Welcome to the class. My name is Ibrahim Taiwo. I will be joining Mr. Chima who wants to handle your management information. Thank you. I know you are seeing me for the very first time online in your class. We wish to give you the best in FC. I'm saying. Now let us look at it. I've explained the margin of safety that margin of safety is the extent at which the budgeted sales exceed the break-even sales. If my budgeted sales is 120, it means that I'm budgeting to sell bread, 120 bread. And eventually I now sold, now my break-even sales now is now 100. That means that my budgeted sales, which is 120, is more than the 100 by how many units? 20 units. That 20 is what translates to profit to you. I hope I get it. And that is what they call your margin of safety. Now, every organization, every manager of a manufacturing entity will want to expand or increase his margin of safety at all times. So if in the exam, in this next week exam, if your examiner asks you, what is margin of safety, then you should compute it. Remember this class I said, margin of safety is the difference between what you budgeted to sell and what your break-even sales is. The difference between the two will give you your margin of safety. So please note it. So these are the formulas that you need to contend with. There are other ones, but these are basics formulas that you need to contend with. Don't forget that I told you that this CVP is actually divided into two parts. We have monoproduct environment. We have multi-product environment. Monoproduct is when you are producing only one product. But multi-product is when you are producing two and more products. Now, at this your level in your syllabus, go and check your syllabus. They asked us to explain only monoproduct for you. I guess what I'm saying now. Why the multi-product? You are not asked to explain the multi-product. So the multi-product will be done in the next level. So please notice that your multi-product will be taken care of in the next level. So this information here is multi-product. So let's ignore the multi-product and go into questions of the monoproduct. These are just the steps of multi-product. Don't need this for now. Let us now look at an illustration. And look at this illustration. Illustration 1. We are told that Paco Limited, Kano, produces a single product with a selling price of what? They want to put selling price. It's a selling price of 20 naira and variable cost of 12 naira. Look at this question now. It's producing a product, one product. Can you now see they say a single product because it's a monoproduct. It's a single product, just a monoproduct. It's producing a single product with a selling price of 20 naira and variable cost of 12 naira. I guess it. Now, let me ask you, Taz. Let me ask you, Taz and Obekwe, any of you should tell me what is the contribution per unit here in this question? Can you tell me the contribution per unit? So one of you should tell me what's contribution per unit? What I just read now. Oh, thank you. Oh, 8 naira. Thank you, Taz. Thank you so much. That means that 8 naira is the contribution per unit, which is what 20 minus 12 naira. It means that selling price minus variable cost per unit is what is. Oh, thank you, Bekwe. Thank you so much. Oh, kindness, you are back. Okay, you're there. Okay, 8 naira. Thank you, Bekwe. 8 naira. That's 20 naira minus 12 naira is 8 naira. Now, your fixed cost is 120,000. They now ask you, are required to determine the following. 1. Now, break-even point in unit and in value. This was how they set it in November 2014 question. It has to break-even point in unit and in value. You do the unit separately, and you first do the unit, you now do the value. Hope you're getting it. If you get to unit, just multiply by selling price. That's just the value. If you get the break-even in unit, multiply by selling price, you get the break-even in value. It's as simple as that. So, and they said, what number of units will be sold to achieve a profit of 40,000 naira per annum? Can you now see? The examiner is silent on what is the tax, whether it's profit before tax or profit after tax. If the examiner is silent in the exam, know that it is profit before tax. You don't need to do any adjustment on it. But if the examiner is not silent, they just say it's profit after tax and they now put the rate there. That means that you need to convert the profit after tax back to the one, back to the profit before tax before you compute your what, your anything you are computing. Now look at the third one. It now say if the tax rate is 40%, can you now see now? How many units of that product will you sell to make a profit of 20,000 after tax per annum? That means I need to convert this 20,000 back to what? Before tax. I hope I get what I'm saying now. So that is very instructive. So let us now look at it, please. Let's first itemize the facts of the questions. Selling price was 20 naira. Variable cost happens to be 12 naira, and fixed cost happens to be 20,000 naira. You now ask to break even in units and in value. Let's also first find break even in units. Fixed cost over selling price and variable cost per unit. That's 20,000 fixed cost over 20 minus 12, which is 20,000 over 8. How many units is that? 2,500 units. That means that you need to produce and sell 2,500 units of the product before you neither make profit nor loss. That's clear, right? Okay. So I must sell 2,500 bread or that product in question before I can neither make profit nor loss. That's one. Two. And also compute break even in value. Now, break even in value is what? It's just break even in unit and selling price. That's this. Or you can just say fixed cost over what? Over contribution per sales ratio. You still get the same answer. But if you get the unit, just multiply by selling price. 500 units times selling price of 20 naira. You have to make a sales of 50,000 naira for you to neither make profit nor loss. Can you now see the difference between units and in value? Now, in units, you'll be counting the units. That's a unit. In value, is to be in naira. Hope I get it now. That's that. Two. Unit to be sold to achieve a profit of what? Of 40,000 naira. What's the unit to be sold to achieve a profit? No, they did not say it's profit after tax or profit before tax. So you now assume it's profit before what? Tax, because they did not specify it's profit after tax. So you will not need any adjustment or conversions. Hope I get what I'm saying now. No adjustment, no conversions as far as this is concerned. So you now see. You need to sell to achieve profit of 40,000. You now say fixed cost over that profit over selling price and variable cost per what? Variable cost per unit. So your fixed cost happens to be 20,000 and the profit you are looking for is 40,000. Add the two together. You have 60,000. Divided by 8. 20 minus 12, you have 8. That means that you need to what? Sell 7,500 units of that product if you want to make 40,000 naira profit. If you sell 1 unit less of 7.5, you will not make the profit. Okay. That's units to achieve 40,000 naira profit is 7,500 units. Now, so please don't. But the last one they now say, if the tax rate is 40%, can you now see? They say if the tax rate is 40%, how many units will be sold to make a profit of what? Of 20,000 naira after tax per annum? That means that if the tax rate is 40%, it means that the tax you are paying is 40%, and the what? You now ask you how many units do you sell to make a profit of what? Of 20,000 naira after tax per annum. That means that profit is after tax. You convert it to what? To before tax. Let me ask you, Obiko and Taz, between profit after tax and profit before tax, which one will be higher? Let me ask you that. Between profit after tax and profit before tax, which one will be higher? Is it profit before tax? Is it profit after tax that will be higher? Which one? Expecting your response. Between profit before tax and profit after tax, which one will be higher? I'm listening. Between profit before tax, that's before they remove tax, and profit after they remove tax, which one will be higher? That's before. Thank you. Which one will be higher? Before, because that before they don't remove tax, right? So that is what you will use your computations. I hope you're getting me. That's what you will use in your computations. I get it. Now let us convert it. Now, our profit before tax is what? Profit after tax over 1 minus tax rate. First need to convert the 20,000 naira profit. To convert the 20,000 naira profit to profit before tax, so what do? You 1 minute, please. You now say profit after tax of what? Of 20,000 over 1 minus tax rate. 1 minus tax rate is what? 1 minus 0.4, because 40% is the tax rate. If we divide the 20,000 divided by 0.6, we have 33,333.33. That will now be your profit before what? Before they remove what? Before they remove tax. Now, if that's the profit before you remove tax, oh, they did not do the other part of it. So assignment, please, you will now compute. How do you now compute the what? The unit to achieve that profit now? What do you just do? So assignment, try to compute the what? That unit that will achieve this profit before tax. What do you just do? You just say your fixed cost of 20,000 to the what? Like 3333 profit before tax, and divide it by 8, which is what? Which is contribution per unit. Whatever you get is your what? Is your number of units to achieve the profit before after tax of what? Of 20,000. So look at it. You need to first convert the profit after tax back to profit before tax. After the conversion, we got like 3,393.33. Then you now use this to now determine the units that will achieve this profit. By saying the fixed cost of 20,000 plus this profit, that will be 53,303. You now divide it by 8. That will give you the number of units to achieve the profit. To solve it, they omitted that, but you can do that as an assignment and submit to me here the what? Here the group. Okay. Now, let us now look at another question. Now look at this question. They said it's a past questions. So let us see how it goes. Now, Ubachooks Limited manufactures and sells a single product. The examiner will not make it difficult, so to say, to know which one is going to use, whether it's monoproduct or multi-product. So you can see that this is a monoproduct because they are dealing with a what? With a single product. Now, the following data has been extracted from the current year's budget. They now give us information of that single product. Now, what is the contribution per unit? They've computed it for you. Is 8 naira. And the weekly fixed cost is how much? Fixed cost in a week, not in a year now, happens to be 10,000. And the profit they make in a week, 22,000. And you are given contribution per sales, contribution to sales ratio to be 40%. These are the vital information of that product. 1, selling the contribution per unit happens to be 8 naira. 2, weekly fixed cost 10,000 and weekly profit 22,000. And the contribution per sales ratio is what? Is 40%. Now, after explaining that to you, the answer, the company's production capacity is not fully utilized in the current year, and 3 possible strategies are under consideration. When they say the company production capacity is not fully utilized, let me ask you, Bekwe and Taz, when they say a company's production capacity has not been fully utilized, what do you think they are talking about? Assuming you are in an exam, you are able to see this. They said the production capacity of an organization is not fully utilized. What does that mean? Can you push more light on that for me, please? Just give me your view in 1 minute, please. When they say the contribution, when they say the company production capacity is not fully utilized, what does that mean? What does that imply in practice? What are they trying to pass across to you? Taz and Obekwe, can you tell me quickly? What data they are talking about when they say your production capacity is not fully utilized? Okay. They have extra space to produce more. Thank you, Taz. Yeah, they have extra space. They have extra labor. They have extra facility. If it is oven, maybe the oven can produce 1,000 bread, and you are currently producing just 600 bread. Can you now see that you have extra capacity that you need to take care of? I guess I'll say that's what it means. Thank you. So if they are told that the company's production capacity is not fully utilized in the current year, and they now say there are 3 possible strategies. They now brought out 3 strategies that they will use to maximize utilization of that capacity. What are the strategies? Those strategies are under consideration. Each strategy involves reducing the selling price. So each of that strategy involves reducing selling price. If you reduce selling price, what happens to the quantity you are selling? Quantity you are producing, they are demanding. They will demand more now. because law of demand, reducing selling price on all units sold with a consequence effect on volume of sales. It means that law of demand says the lower the price, the higher the quantity. So the strategy that they are adopting is that they want to reduce the price so that the quantity can push up, so that they can use that capacity that they have not been using. Hope you're getting me now. So therefore, let us now look at the detailed effect of each of the strategy. Let's look at each of, there are 3 strategies now. Let's look at each of these strategies and see what they mean by these strategies. Let's start with the first one. Let's see how they work. They coined the strategy. They said the detailed effect of each strategy is as follows. Strategy A, B, C. And we have what? Reduction in what? In selling price. And we have what? Increase in what? In sales volume. It's in percentage. Now look at strategy A. Strategy A means that we are
Okay.
Sorry, I had a network issue. Sorry. Okay. I'm sorry. So these are the three. Thank you for your patience, please. Thank you, kindness. Thank you, everybody. Now, these are the three strategies: strategy A, B, and C. You can see reduction in the unit selling price of this. These are the percentage reduction in the unit selling price, and these are the increase in what in the demand because of that reduction. If the price reduces by 2%, the quantity will increase by what? By 10%. If the price reduces by what 5%, that will be 18% increment. 7% reduction by 5% increase in demand. Now, so you calculate the selling price per unit. Don't forget, they said calculate the what? The selling price per unit of the production of the products for the current year. What's the selling price? You are not given the selling price, but you are given the contribution per sales ratio. You can work around it. I guess what you can work around it using that. Hope I get what I'm saying now. So let's look at it. So on this, I think we have only the students are not online for now. So there is we have to wait for them to come on board. I think they had a network issue. I'm only having my prof, my two able profs there. So let us hold on for them to want to come on board. Okay, I have one now. I have kindness to pick with. Thank you, kindness. Come. Okay. So we have kindness now. So what? Where is our where is TAS? Doesn't TAS? Mm. Okay. Let's continue. Let's continue. Determine the selling price per unit. You're not even selling price. You have to determine it. That's one. Two, the weekly sales in unit and value. Weekly, not yearly. Notice. The weekly sales in unit and value for the current year. Happens to the 3 marks. The current year break even, that's yearly now. Current year break even, those things they have their meaning. Weekly, yearly. The current year's break even point in units and in value, that's 4 marks. And they now ask you, determine with a statement which one of the three strategies should be adopted by the company in order to maximize its weekly profit. So you can see what they meant by selling price per unit. If I want to get my selling price per unit, what I will use? You have been given contribution per unit to be 8 naira. I hope you still remember. Your contribution per unit happens to be 8 naira. Why you are not given selling price, but you are given contribution per sales ratio. Let's look at how we can use that two items to get our selling price. Look at it. My contribution to sales ratio is 40%. My contribution per unit is 8 naira. Now, you know very well. Oh, welcome, TAS. That's welcome. You know very well, if your contribution to sales ratio is 40%, and your contribution per unit is 8 naira, they say, what's the selling price? You know, if I have to be in that exam, the first thing I will need to do is, okay, if I know my contribution per sales ratio to be 40%, what is even the formula of contribution per sales ratio? I'll work with that, because that's how you work in MI, you know. You now say the formula for contribution per sales ratio is what? Is selling price minus variable cost per unit over selling price. Okay, let's look at it. Contribution to sales ratio is what? Is selling price minus variable cost per unit over selling price. Are you getting me now? But you know that that should be your contribution per sales ratio, which is 40%. Yeah? I can now say 40%, which is the contribution per sales ratio, is equal to selling price minus variable cost per unit over selling price. But don't forget that your selling price minus variable cost per unit is your contribution per unit. Remember when we started this, we said our selling price minus variable cost per unit is our contribution per unit. Therefore, I can use 8 naira, I can substitute 8 naira for selling price minus variable cost per unit, because SP minus VC is the same thing as 8 naira. Therefore, I will now say 40% is equal to 8 naira over selling price. That's selling price minus variable cost per unit, which is 8 naira over selling price. It's equal to 40%. You know, 40% is 0.4 now. See? So you now see 0.4 times SP, selling price, is equal to 8. You know, you cross multiply. 40% is 0.4 times SP is 0.4 SP is equal to 8. Then you now divide both sides by 0.4 is 0.4. What you now have is your selling price is equal to 8 divided by 0.4. That's 20 naira. That means that your selling price is 20 naira and that you get that 2 marks there. So in the exam, if you are not given directly, just go and look at the formula of the contribution per sales ratio. Use it to bring out the content of what they require of you. Hope you get what I'm saying. So that is one. The second one is, what is weekly sales in unit and value for the current year? What is weekly sales in unit and value? Don't forget to get the weekly sales. You know you have gotten, you know your profits, is it not? They give you your profits in week. They give you your profits, your fixed costs in week. So you remember the formula we started with. I was saying when we want to get a targeted profit, it is the unit that will achieve a targeted profit. That unit will now be fixed cost plus targeted profit over selling price minus variable cost per unit, which is contribution per unit anyway. So you can use that. Can I say that you to get that unit now, we achieve this profit now. Just say what's the fixed cost? 10,000. You know, everything is in week now. Plus what's the profit? 22,000. Divide it by 8 naira. What do you have is 2,000 divided by 8. How much is that? 4,000 units. So that 4,000 units is what? Is a break-even in what? Is a what? Is a unit that you need to sell to what to achieve 22,000 naira profit. Hope you understand what I'm saying. So you use that formula I gave you to make that decision. When they say you should find it in value, what do I say you should do? Just multiply your unit by selling price. How would be 4,000 units times 20? That's 80,000 naira. So if these are 4,000 units at the unit of that product you need to sell in a week to want to achieve what? 22,000 naira profit. And the sales should be in naira, should be 80,000 naira. I hope you're getting it. That's one. 2. They now say the 3. They now say current year break even. They now change it from week to year now. How many weeks in a year? How many weeks in a year? 52 weeks. So you have to multiply whatever you get now. You know, everything will be in a week now. You multiply by 52 weeks. So that you can get your wow. Tax is not on for now. So that you can get the break even in current year. So how do you get your break even? It is fixed cost over selling price minus variable cost per unit. But the fixed cost was in weeks, happens to be 10,000 over 10. This is contribution per unit now. She is selling price minus variable cost per unit, which is 8 naira. Just 10,000 divided by 8. That will give you 1,250 units per week. That means that in a week, you need to sell 1,250 units for you to break even. I hope you're getting it. That's in a week. But they say it's a current year. That means that you need to convert it to what? To a year. Can you see? To convert it to a year break-even unit now, it will now be 1,250 units, which is per week, times how many weeks in a year? 52 weeks in a year. You use your discretion for that to know that it's 52 weeks in a year. Oh, Taz, what happened to your network today? So to convert it to a year, break-even units, you just say 1,250 times 52 weeks, you have about 65,000 units per year. You understand what I'm saying? That's that. So the next thing we need to do now is to find what is the annual break-even in value. In value now, the unit is 1,250. If you convert it to value in a month, in a week now, value now will be multiplied by 20. I told you I just multiplied by selling price. You get the value. You have 25,000 naira. You have 25,000 naira. That's the value. Then you now convert that to annum, in annual break-even in value now. Then you multiply the 25,000 naira by what? 52 weeks per year. That will give you 1.3 million naira break-even, annual break-even. Hope I get what I'm saying. That is that or that. Now, I will explain that now. Now go to number 4. Now, in that number 4, you now say to determine which of the 3 strategies should be adopted to maximize profit. The first strategy is that you reduce your selling price by 2% and you increase your quantity by 10%. Our current selling price happens to be 20 naira anyway. If you want to reduce it by 2%, you know what to do? Just multiply by 0.98. I hope someone will ask me, why am I multiplying by 0.98? Whenever you are reducing something, just remove that thing, that percentage of that thing that you are removing. Just remove it from 1. Whatever you get, just multiply by that value. You will have reduced it by that percentage. But if you are not convinced or you are not sure of what you are doing, do it manually. If you want to remove 2% from this thing, just compute 2% first. What is 2% of 20? That's 0.4. Now remove 0.4 from 20, you have 19 naira 60 kobo. Hope I get what I'm saying. But instead of us going to that, you just say times 0.98. You assume 1 is 100%, 2% is 0.02. You move 0.02 from 1, that'll give you 0.98. You multiply by 20, you would have removed it, reduce it to what? To 98%, or reduce it by 2%. So I've reduced my price by 2% now, because that was what the question said for the first strategy. Now that your quantity must increase by what? 10%. This one is increasing now. Initially our profit was over 4,000 now. So for you to now increase by 10%, you now say 10% of 4,000 is what? 400. Is it not? You now add 400 back to 4,000. What do you have? You have 4,400. That means that in the first strategy, our selling price will drop to 19 naira 60 kobo from 20 naira. It will drop for what? 19 naira 60 kobo from 20 naira. Why? For sales now, your quantity will increase by what? By 400 to 4,400 from 4,000. Therefore, what is the profit position at that level? At that first strategy. That's what you use to make your decision on. Determine the profit at that level. Therefore, to determine the profit, now you now say, what is the sales? Sales is, the new selling price is 19 naira 60 kobo now. You now multiply by the new quantity, 4,400, you get the what? 86,240 naira sales. That's the sales. You now say less variable cost. Now, in the cost of lessening or removing our variable cost, now what's our variable cost? Our variable cost in this system we're not given directly, right? But it's your selling price minus variable cost per unit. It is your what? Contribution minus what? It's your selling price. We are getting our selling price before. No, they've given our contribution is 12 naira now because we already know our selling price. Our selling price was what? Was 20 naira. Our contribution was actually 8 naira. If you remove your contribution per unit from selling price per unit, you get your variable cost per unit. Because the addition of your variable cost per unit and your contribution per unit is what gives you your selling price. So if I'm looking for my variable cost per unit, it's better for me to remove my contribution per unit from selling price to give me the variable cost per unit, which is 12 naira times how many units? 4,400. It gives you 52,800. That's your variable cost. Then you remove it from the sales of 66,240. You have your what? Contribution of 3,440. and your fixed cost in a week is 10,000. You move it, you have a profit of 23,440. Now, the implication of this is that in the first strategy, the profits the company will be making, assuming they are able to adopt a reduction in price by 2% and quantity increase by 10%, the profit will be 23,440 naira. That's one. Two, you now go to the second strategy, strategy B. What is the reduction in price? The reduction in price is 5% plus 5%, while quantity increments will be 18%. If something is 5% reduction, you just say it's 0.95. I told you, just remove 5% from 1, you give me 0.95. Because 5% is 0.05. See? You move 0.05 from 1, you give me 0.95. You multiply that value by 0.95, it will give you the new value, which will be a value that's less of what? Of that 5%. But if you don't do it that way, you can just compute 5% of 20 naira. 5% of 20 naira is 1 naira now. Okay? You now say 20 minus 1 naira, is it not 19 naira? You still get the same answer. 19 naira. That's the new selling price in strategy B. In strategy B, the new selling price happens to be 19 naira. Don't forget, the question I'm using happens to be a skill question in ICANN. So if you can do normal question in foundation, this skill should not be a problem. It's just a question that they can also test your own level. So that's 19 naira. Now, increase in sales volume is 18%. You want to increase something by 18%. You know it was 4,000 units before. We now need to find a way of increasing it by 18%. That's for 18% is 0.18. Add it to 1, you give you 1.18 because we are increasing. If you are reducing, you deduct it. Now the 4,000 times 1.18. So what do you have? 4,000 times 1.18. That is what? The new quantity is 4,720 units. Therefore, the profit will now be sales is equal to what? The new 19 naira is 19 naira, while the new quantity is 4,720. That gives you 89,680. Your variable cost is what? 12 times 4,720. Your variable cost per unit is still 12 naira. It will not change. Times is the selling price and quantity that is changing. 12 times 4,720 is 56,640. Then what do you do? You now remove what? You remove your contribution, your variable cost from your selling price sales. You have your contribution of like 3,040. You now say less fixed cost of 10,000. How much do you have as profit? 23,040. That means that in the option 2, in the second option strategy B, what happened? It means your profit will be 23,040. But in strategy A, if you look at strategy A, our profit was 23,440. Assuming, let me ask you, two of you, let me ask you, my students. Oh, are we online? Oh, Taz is not online. Wow. Now, Kindness, can you tell me, Kindness, assuming these are the two strategies, strategy A and strategy B, are the two main strategies that we have here, which one will you have gone for as the option? You know, you have to do strategy C also. I want you to do that as an assignment for me. Kindly do this as an assignment and send it to me, right? But assuming there are two options, two strategies that we have. So can you tell me which one out of the two strategies that you have gone for? As in, you have advised the management with which one? Which one of the strategy we have advised them to go for? Is it strategy A or strategy B? We have advised them to go for. So, Kindness, I'm expecting your response. Are you still there? me, the one that gone for is what because was IGA is giving us more contribution, more profit. I get it as against so thank you so much. Thank you. This will be the end of the class. Please do the assignment and submit to me on the what on the group. My able host, thank you for being there. For the students, thank you, Taz. Thank you, everybody. Have a good night. Thank you. Thank you, my host. Appreciate, sir. Thank you, guys. Thank you, people. I hope you enjoyed the class. Thank you. You can talk to me via the group, WhatsApp group. Thank you so much. I appreciate, sir. My able host, you can close the class, please. Thank you. You can close the class, please. Thank you, sir. Hello, 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 sir. Hello. My able host, Ofayodeji, can you help us close the class? My host. My host.
Hello,
My
Prof.
host.
Yes, sir. Hello, Prof. Hello.
Oh, Mutu.
Hello, France. I can hear you. I can hear you, sir.
Host.
I can hear you, sir.
Yes, let me close the class, please.
I can hear you.
Okay, sir.
As you
Let me
as you end the
close
meeting.
class.
All right.
Yes, I'm done. Please let me close the class. Hello, let me close the class. I'm done. I'm done.